Barb, happy almost New Year. Let's get right into it. You like Broadcom. It had quite a run for a while. It was up more than NVIDIA this year. Why is it still worth buying?
Well, I think the stock, when you look at the growth rates on this, they keep accelerating. Their backlog now is at some $73 billion. Their AI revenue is up over 70%. And the management is looking out the next 18 months, see chips doubling and growth continuing strong. So I think that what you're seeing is that people are concerned about overbuilding this bubble, which it is not a bubble in my view. I think we are still in the very early stages. And certainly when you look at some of the stats about corporations and how many have fully implemented AI, it is still single digit. So this in 26 is going to be a year where a lot more corporations who are in the testing phase trying to figure out what they need will be fully implementing. So the demand is just huge. And of course, the more things are created, the more people get involved, and that's corporations, that's individuals. So it's a virtuous circle for now. And so I don't see that ending in the next 6 months.
The internet's impact was very real, but there was an internet bubble. What convinces you that we're not in an AI bubble?
Well, because I think when you look at where we are, and again, the stats I just said about corporations, and there is so much demand. You look at all the data center building that's going on, the concerns over energy shortage, that is not just based on a hype and a dream. And again, when you look at what is happening in terms of the usage, whether it's Gemini or OpenAI, and the usage is just exploding. I think Gemini is now up to 650 million users a month, and they're just beginning, to continue that climb, and they're taking share from OpenAI. So I think this is sustainable.
One of the more risky calls that I see you making here is that you're bullish on Starbucks. I view Starbucks and Nike as being these similar big brand turnaround stories in progress. Why are you picking Starbucks here and not Nike?
Yeah, I think there's a big question for both of them. Both have sort of broken models. And Nike, though, went really to an extreme when they tried to go direct to consumer. They cut out their wholesalers. They lost a lot of shelf space. And that, in my view, brought in a lot of new competition, which has been eating share. And they lost their innovation chops there, which they had done for many years. And so I think they have a long way back, even though in the past they have righted the ship. But this time they had made, I think, a serious wrong turn. So I think it just takes that much longer. Starbucks, as you know, they brought in the star CEO. He turned around Taco Bell, turned around Chipotle, and he's put a lot of initiatives in place, but a lot of the initiatives will not really take hold until 26. And yet, in the last quarter, when they reported, it was the first time in some 7 quarters, 2 years, that you saw positive same-store sales, both in the U.S. and globally. So to me, that is very encouraging, that what they're doing in terms of stores and the customer experience and operational efficiencies and staff is really starting to take hold here. Nike, of course, has had a lot of expectations built in, and they, once again, in their most recent quarter, disappointed. I just think they've got a longer road to hoe.
Metals have looked pretty shiny this year. You're still excited about gold because you expect it to mostly hold its value or actually go much higher in 26?
Yeah, it's a good question. When you anything that's up like 70% year to date, you always say, well, is that it? But I really think there's longer term structural forces in play here. Gold in the past has really been used in times of nervousness or inflation fears and this sort of thing. But I think there's a real change that's happened, really kicked off in earnest in 22 when Russia's foreign reserves were impounded because of their invasion of Ukraine. And central banks everywhere said, hey, wait a minute, we need to diversify away so that we not hostage to other countries impounding our assets. And so you've been seeing steady buying, and I don't see that's going to decrease anytime soon. And certainly when you see some of the stats that we can get hold of, whether it's China adding to their stockpile or other countries, particularly in the emerging markets, I think that trend should continue. Now, that's a little bit different than we're seeing with silver and copper, nickel, I think, and aluminum. These are things that are really being driven, I think, by the data center build out. And that is the AI drive. And that's going to be, if I'm right, this next few years, that's going to continue to unfold. So the materials can continue to move higher, even though they also have had a great run this year.